morning. Um, I've been asked to provide a basic training video on the dynamic profit pivots, um, the various components of the signals, how you use them, how you trade with them, etc. So I thought I'd put something together here quickly to address that issue because I'm getting that request from a lot of new subscribers and potential subscribers. So let's get right to it. I'm going to assume you know about the HLB signal and how that works and about spouts and all that good stuff. So I'm not going to cover any of that in this video. I'm just going to focus on the dynamic profit pivots. All right, these are actually way simpler than they appear to be. The first thing you need to understand is the dynamic profit pivots are not regular pivot lines like you would find in any standard technical analysis charting software package. These are unique to my trading signals. I invented them, and the key point to understand is that they are in fact dynamic. That's why I named them that. They are constantly changing over time, and they move around. So if you look at them now and you look at them 10 minutes from now, they're going to be in different places based on a number of proprietary algorithms that I've written that take a look at price action and a bunch of other things during the day. So that's point number one. They're not the same as regular pivots. So what are they? Well, there's basically two sets of them, and all you need to remember is the purple line are the pivots for price highs, and the orange lines are pivots for pricing lows. If I had to define them, what I would define them at is very highly likely places where price action may reverse and go back in the opposite direction. So I've created a couple of things to make this easy for you. Obviously, one, the two different colors of lines. The purple lines are, let's call them U-turns at high price actions, and the orange lines are U-turns at low price actions. What I've also done is I've color-coded the bars so that you sort of get a visual heads up as to when these potential reversals or roundabouts or 180s, whatever you want to call them, are going to happen. So let's look at an example of how you would trade it. One really nice one here on the Euro chart is you have two purple profit pivot bars, painted purple, and what that means is that you are in the potential turnaround zone on the high side, because remember, purple lines represent high turnarounds and orange line represent low turnarounds. So what you want to do is you want to be on the lookout for the painting of a new bar that turns red, meaning that pricing is starting to go down, because red means down, green means up. So this is a place where you would enter a trade on a purple profit pivot bar. Pretty simple. I don't tell you how to set your stops. I don't tell you where to take your profits. I have some Keltner channels in here. Those are good places to take profits. That's what I personally use. What you use is completely up to you. And where you set your stops is completely up to you. Some people like a guideline, and that's why I put the Keltners in there. Now, let's look at the reverse of that. Where would I take a long trade? Well, one of the easiest places here would be a green bar after an orange bar. And you have one of those right here. Okay, so you could have gone long on that bar. You could have exited somewhere in these Keltner channels and you would have made a profit. That's basically all there is to them. They're pretty simple. The only other thing on here that you need to understand are these little arrows. And what these little arrows are basically indicators that a profit pivot boundary has been pierced. Okay, so there's an audible signal that rings when those go off, and they can be sent to your cell phone as a text message if you want them to. I just have them there just to kind of wake me up when I know they go off. That means, okay, I'm breaching one of these boundaries, either to the high or to the low side. Trying to look here, we only have ones on this particular chart that show when the pricing breached the low end, but the equivalent is purple and it's pointing to the downside. So it's as simple as that. So that's pretty much all there is to these things. Just remember the lines, the purple lines are the upper boundaries, the orange lines are the lower boundaries. When you get into a short trade, you want to watch purple bars forming and you want to jump in on the red bars that form right after a series of purple bars. And if you have orange bars forming, you want to watch out for a green bar to jump in long. It's as simple as that. I hope that helps. This is the training video for dynamic profit pivots, and I'll see you later. Good luck with your trading, and thanks for stopping by and checking out the video.